Palo Alto Networks reports earnings this week. The stock just exploded, and the FSR just hit its lowest reading of the entire year during the move. We have seen this exact setup before. PANW, Palo Alto Networks, 1 year of daily data, predictability score of 78%, average rolling FSR of 94%. AI cybersecurity, the platform play on enterprise security, and a chart that is sending a very specific warning going into earnings. Graph starts at 197. Palo Alto is already the dominant enterprise cybersecurity platform, but the market is nervous. The company pivoted to a platformization strategy, essentially giving away products to lock in long-term contracts. Wall Street hated it initially. Price drops 190, 170, 165 at the low around interval 43. FSR drops to 85% during the decline, then recovers. Price climbs back 180, 200, 220. FSR recovering 94, 96, 97. The platformization thesis starts getting validated. Customers are consolidating their security vendors, and Palo Alto is winning. Then around interval 121, price fades again. 220 back to 200, 180, 160, 143 at the lows, the worst level of the entire year, well below the 189 yearly average. FSR stays relatively healthy during the decline, 89%, 92%, 94%. Structured selling, not panic. The platformization strategy is working operationally, but the market needs proof in the numbers. Then the proof arrives. Revenue beats, remaining performance obligations. The forward contract backlog explodes higher. Enterprises are signing multi-year security platform deals at a pace nobody expected. Price breaks 160, 180, 220, 240, 260, 270 right now, nearly doubling from the yearly lows in weeks. And look at the FSR during that explosion, drops to 81%, the lowest reading on this entire one-year chart. Same warning signal we flagged on UMAC, Hewlett-Packard, Dell, and ARM. Fast vertical moves always break structural consistency. Earnings this week, and here's the critical difference between PANW and AVGO going into their reports. AVGO went into earnings with FSR at 95%, maximum structural support at all-time highs. PANW is going into earnings with FSR at 81%, its lowest reading of the year during a vertical move. 81 FSR at all-time highs going into earnings means the move is happening on momentum, not structure. A beat is already priced in. Any disappointment, guidance miss, slower RPO growth, margin pressure, and there's nothing structural holding this price up. Watch that sliding window after the report. If FSR recovers above 90% while price holds above 240, the platformization thesis has structural foundation. If FSR stays below 85% on any post-earnings weakness, the move got ahead of itself and the round trip could be fast. The data is giving you a clear warning going into the report. All of this data can be found at predictability-api.com. Link is in the description. Are you holding PANW into earnings or taking profits? Drop a comment, subscribe for more. Breakdowns happen all the time. Thanks for stopping by. We'll catch you in the next one.